Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move today. I'm Nathan Hager, joined by Bloomberg's Dan Curtis, watching Netflix shares move lower and lower still after earnings. Good morning.
Good morning, Nathan. Yeah, that's a continued sell-off for Netflix in the pre-market. Those shares under ticker NFLX are down 7% in the pre-market. They've already taken a 30% hit from when the company announced it was going to make a bid in for Warner Brothers. But let's go into what they reported. A lot of the focus is on the costs for this year. So Netflix said it's going to increase its spending on film and TV shows, good for viewers potentially who want more content, bad for the bottom line. That's going to be about $20 billion in total. The Warner Brothers deal, it sees another $275 billion being spent on that this year. That's on top of $60 million spent last year. In order to pay for all of this, it's pausing buybacks to bolster cash. It also offered projections for the current quarter. It said $12.2 billion in sales. That is on target, but all the extra spending is bringing the forecast of 76 cents per share for earnings underneath what Wall Street was expecting. So a lot of attention on the spending. For the fourth quarter results themselves, so what they did just going into the end of last year, not too bad just at a quick glance. $12.1 billion of sales, 56 cents per earnings per share. Both of those above estimates. 325 million subscribers, up 8% from prior year. So some growth on that, but the spending this year really catching the trade this morning.
And we got earnings just this morning from Johnson & Johnson. That's looking like maybe a more positive story.
Yeah, those shares are down 2%. They've actually come off the pre-market lows. So J&J down 1.8% in pre-market. The drug maker reported fourth quarter sales that grew 9% to $24.6 billion. That beat estimates. Earnings were $2.46 per share. That's a penny shy. Sales for this year will be $100 billion, which is near average analyst estimates. And a lot of focus on this company because the guidance indicates that the company will do well under President Trump, even after it cut prices to appease him. The CEO said that concessions added up to hundreds of millions of dollars, but J&J does have some new drugs coming to including a cancer treatment. So the growth there could help offset some of the costs from cutting the prices.
And finally, just to coin a phrase, United Airlines still getting a lift after earnings.
Yes. Shares taking off a bit to continue with that phrase. It reported fourth quarter earnings of $3.10. That topped the $2.92 per share estimate. The demand there being driven from premium domestic seats and international travel. That's something we've heard from Delta already. So it looks like some strong spending from the upper side. For the fourth quarter, it did report $250 million hit pre-tax earnings because of the U.S. government shutdown, but overall it's seeing $12 to $14 a share this year, which is just basically what Wall Street was looking at. So that's helping lift the shares 3.5% in the pre-market.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.